Stablecoins and payments ecosystem, user acquisition, infrastructure, and regulation hurdles.
Thanks everybody, thanks for coming, and thanks for attending Sigma. We've got a great bunch of panelists here today. Welcome to the stablecoin and payments ecosystem, user acquisition, infrastructure, and regulatory hurdles. Unlike the usual roller coaster of the crypto volatility, stablecoins bring stability for stablecoins. And less volatility to the crypto side. The real question is, how are they going to reshape digital assets and the payments landscape? And will they deliver on their potential or simply be absorbed into existing systems? I'm joined by some great panelists here, and we'll start with Jamie and work backwards. Jamie, would you like to introduce yourself?
Hello, James Bennett. Jamie, CEO at StableMint. We combine fiat and stablecoins. We are a licensed, MiCA licensed stablecoin issuer here in Malta, backed by CoinShares.
Thank you. Jonathan.
Hi, I'm Jonathan Lowe, the CEO and founder of BipTap. Basically, we've built like the world's first omni-bank, traditional bank, crypto bank, neo-bank, crypto exchange, crypto cards, everything in one. And we are revolutionizing and creating like an Airbnb for banking. Superb.
We need to speak then, yeah? Excellent. Alexander.
Hi everyone, my name is Alex, and I'm the CEO of xremit.io. We allow for effective off-ramp into prepaid and gift cards across various industries.
Thank you. Mark.
Hi everyone, my name is Mark Berkovich. I'm CEO of Kia Bank. We're a group of financial licensed companies with a mission to bank the underbanked clients, providing fiat services, crypto services, and of course stablecoins these days.
Super. As you can see, we have the right people on board here today, guys. Over the next 30 minutes, we're going to dive into essential questions on how do we win users, what infrastructures are really needed, what regulatory roadblocks lie ahead, and more importantly, what role stablecoins are going to really play in the future of payments. To get started, I think we'll start with Jonathan, if that's okay with you. Jonathan, you work closely with end users, with what you're doing, with all of the things that you're doing. From your experience, what drives the user acquisition to you? So when it comes to the stablecoins, what barriers do you feel still exist as well?
Well, I think for adoption, the most important thing now, it's not about technology. I know there's a lot of companies and projects creating a lot of amazing technologies like gasless, fast speed, and stuff like that. But as long as you require the user to need to learn new stuff, it's going to be a huge barrier, the learning curve, because society, they don't like to learn stuff. So we've built an infrastructure to actually make it as seamless as possible, to fuse blockchain technology and stablecoins into their everyday lives. For example, using chain abstraction. Let's say if somebody needs to use some crypto in any shop, right? The user does not want to create a new wallet, or he does not want to learn how this is done. They just want to be like, okay, how do I do it with my phone? I used to use my digital card to pay. How do I use it with my digital card to pay? I don't care what technology you use. I don't care what stable coins or what crypto you use, whether it's a meme coin. They just want it as easy as possible. So back to the question, stable coins or infrastructure, I believe it's both. Because what users really, really care about is certainty, right? And ease of use. If it's certain, they don't have to worry, what if this money goes to shit? Which is why they're afraid of crypto. Yeah. But stable coins actually they used to create a lot of comfort because it's packed. Yeah. But I don't know, the regulations are changing, and there's a battle of stable coins, USDC, USDT, ban of Tether in Europe. So at the end of the day, I think the bottleneck for adoption is regulation. So I think the regulators and the stablecoins, they have to work closely together, which I think is what's happening right now. Because at the end of the day, users, we all want users to adopt to digital currency. I think everyone agrees, right? Whether you like crypto or not, at the end of the day, we are going to move forward to digital currencies. So the bottleneck is actually regulation, and on-off ramping have to be as easy as possible. And adoption has to be ease of use.
So realistically, pulling the friction away
Exactly.
from the crypto side of it, so that people don't actually really know what they're using. So it's as seamless as, just as you say, using your phone, tapping it, buying a coffee.
Correct.
That's it. Super. Thank you very much. Now, stablecoins, as you were mentioning then, sometimes there's some instability around stablecoins. Stablecoins are often pitched as a sort of antidote to the crypto volatility. Do you all agree? And I think I'll pass this on over here to James. Do you agree that they actually do deliver stability, or is it just a perception?
Yeah, thanks a lot. I think when we were talking about this question just before we came on stage, and two different ways to look at it. I mean, on the one hand, we had the Terra Luna crash that happened a few years ago now, best forgotten, where people lost faith a little bit in the idea of a stablecoin. The reality is that was never a stablecoin. It was basically a meme stock. And if you were buying into that, thinking you could have a decentralized, stable form of value, then more for you, let's say. On the other hand, you've got the likes of like MiCA DAO, where you've got DAI and other collateralized stablecoins, crypto collateralized, that are truly decentralized. And I think they've done a great job of actually serving a particular market. The reality is, going back to the point made here, is that the end consumer doesn't, as much as we want them to. I've been in crypto since early 2017, and any of you that have been in the industry before 2 years ago would have probably joined with this idea of anti-banking, decentralization, but in practice, the mass market don't care about that. They care about having an asset that they can go and pay with somewhere in a store, and hold their wealth in. If I can just then continue on, because you talked a little bit, that was one way of looking at it, but the other way, which I think is really interesting, is the difference between stablecoins and crypto today. The crypto market is very volatile, because you mentioned volatility. Today, exchange-traded volume on crypto exchanges is down a half, so 50% than it was 2 years ago, and it's a high of the current cycle, right? At the same time, stablecoin transactions are up 300, 400%. So we're seeing this move away from a volatile crypto cycle driven by speculation towards digital assets or stablecoins as a payments instrument that are getting gradually adopted in a steady and continuous way. So yeah, I think they definitely poles apart. Volatility and stablecoins, two separate concepts.
Excellent. Thank you very much. I know we were having very good discussions about the stable coins and the percentages around the iGaming industry now, and the growth on that is phenomenal, isn't it?
Yeah, so I did some research about 9 months ago, and was looking at where stablecoins have really been used. Like, what does the adoption look like? Where has that sort of growth initially come from, and where is it today? And looking back to 2014, when we had the start of Tether, and then up to 2017-18, before we had the first retail, let's say, super cycle or major cycle in crypto assets, 60 to 70% of stablecoin transactions were happening here in this industry, in the iGaming industry. And when you look at the regions specifically that those stablecoins were active in, it's really in those markets that are a little bit grey and sometimes a bit further afield. Because ultimately what stablecoins do, and I'm not advocating for it, but what they do is provide a payment instrument that sits outside of traditional banking networks that are heavily politicized, like SWIFT, that are politicized by the current hegemons like the US, and they provide an alternative. We're sitting here in Malta, we're in the West, it's very politically stable, but when you're in, let's say, other jurisdictions where it's Middle East, Far East, and so on, you don't have that luxury. And so here, this is a politically neutral instrument. It was until now MiCA has come in. And again, just a comment. Now, let's say the MiCA and even the Genius Act in the US are maybe going to start politicizing stablecoins. And we're seeing the likes of Tether trying to kind of steer clear of that for the time being.
I'll actually then follow on when you're mentioning MiCA now and the regulations and things like this as well. Because MiCA has literally split Europe from the rest of the world now when it comes to stablecoins. So as a founder of stablecoin, do you see, or what do you see now being the biggest regulatory hurdle. Is MiCA the biggest regulatory hurdle, or are there other regulatory hurdles coming in?
Yeah.
And you were saying about volatility around the world and us being neutral and things like that. You know, the political side in the US at the moment. What's, because the US seem to be really, or with the Trump regime, let's say, it seems to be embracing crypto one week and pushing crypto away the next week.
Yeah. Well, let's just say that's Donald Trump's sort of personal exercise more than anything else. But no, on MiCA and on regulation in Europe, this is an important one because the EBA just dropped quite a big bombshell, which they would say was visible all along, which is that stablecoins are payment instruments, and they fall under the Payment Services Directive, so PSD2. Now, the industry was anticipating that stablecoins would be in scope for the Payment Services Regulation and the third Payment Services Directive, which we're looking at 2026, 2027, 2028 in terms of when they're all rolling out and enforced. In June of this year, the EBA came out with a paper recommending that the national competent authorities, so the MFSA for Malta, should start taking action against any crypto exchanges or EMIs that are stablecoin issuers that are not licensed to operate payment accounts and or to fulfill payment services from March of next year. So think about that. You're a CASP. You've just spent hundreds of thousands of euros, if not more, countless hours, days, weeks, focus of your strategic meetings, all around how do we get a CASP to be licensed in Europe under MiCA. That's what we need. Then we're set free. We can do business. And then in June, so that's about 6 months after, the first ever time you could apply to be a CASP, the EBA comes in and says, if you're an exchange and you want to allow stablecoins to be sent from your exchange, you actually need to fall under PSD2 and you need to have payment services. So they then have to go and get a new regulation in payments. They don't have any experience in payments. They know about crypto, they know about trading, they know about custody, but then payments is a whole different field. So it's becoming challenging. I think it's the right decision in terms of the direction of travel because they're
the wrong timing.
But it's terrible timing.
Yeah, and we all know. Well, we should all know here that it doesn't take 6 months to get an EMI license. It's something that's going to take a while. Thank you, James. I appreciate it. Mark, from an infrastructure perspective, how ready are the current payment systems to integrate the stablecoin? Are we really building parallel ecosystems, or can they just slot into what we've already got?
Well, first of all, I wanted to add to James's point. So, iGaming industry is always the most receptive to any innovation in payments due to its business, due to the nature of regulation, and so on. So usually iGaming, any new payment methods, any new methods, they test the first. So I think payments industry should be very, very grateful for iGaming. So they actually test any new innovation and things. In terms of stable coins, I'm really happy about this current narrative, of course powered by Mr. Trump. It's a new thing, but of course it's been for a long, long time. Exchanges have been moving liquidity in trillions using stable coins, but now we are getting away a bit from this negative connotation of crypto, virtual assets we tried, now stable coins. Just to make it very straightforward, it's even called stable coins. So it's very good. It helps normal people, grandmothers start to use something more innovative. So I'm very, very happy to see that. In terms of ecosystem, of course, regulation is a huge barrier. It's uncertainty everywhere. Even regulators are often uncertain on what they're doing. Like for MiCA, there are no tools, no unified tools to comply with travel rule stuff and all these things. So everyone needs to improvise, and everyone's watching and supervising and trying to figure out what's happening. For ecosystem, I would say that currently it's a huge competition. One from stablecoin issuers. The most successful IPO of this year is Circle, doing amazingly well. And of course, the main driver is that they developed their own infrastructure and ecosystem. They have payouts network. They have diversity of stablecoins. These days, the stablecoin competition is big. You need to pay yield. You need to provide more infrastructural elements. So it's becoming a very, very important thing for stablecoin issuers. And in parallel, the payments infrastructure and VASP and CASP infrastructure is also developing at an amazingly high speed and pace. And only those who can provide the diversity of different methods, channels, continue to be competitive, in my opinion. I think the war for the fees for each 1 basis point will stop at some stage, and only stable channels combining stable coins and fiat methods would actually be competitive today.
Thank you. Going with that, so do you see stablecoins, and this is to everybody here, do you see the stablecoins actually disrupting traditional banks and card systems, or do you see them merging to be one proper ecosystem on payments?
I think it's merging. It's more collaborative work. Obviously, I think no one knows. Visa, MasterCard investing billions in stablecoin infrastructures because no one knows. Maybe in 10 years, no one will use card acquiring. Everyone wants to hedge. The most important, and what's clear 100%, fintech players cannot stay on the side. Everyone needs to develop stablecoin infrastructure to be competitive in payments and in remittance business and processing business. And the future will show us, but 100%, those players that are not preparing now would be very uncompetitive if they're not prepared.
Yeah. Look, I think there's probably a tipping point, because the reality is that today the large majority of money of users operate in the fiat world. Is it a better instrument than a stablecoin? No. But they're not used, they don't have all of the infrastructure and the wallets and the keys and the KYC to be able to do that. They've got bank accounts and neo-bank accounts and so on. I think we'll reach a tipping point at some point, I don't know when that is, maybe less than 10 years, where then stablecoins reach critical mass and then fiat slowly fades away. What I can say is today, all of the major payment platforms, payment providers, PayPal, Worldline, Fiserv, all of the banks, JP Morgan, Societe Generale, like all of the asset managers, every single major player that deals with money is either building their own stablecoin or partnering on stablecoins, everyone.
And then you can go down the route of the sort of CBDCs then as well, and see what goes on that route as well.
Banned.
Yes.
Yeah, and just to add, I wanted to add that it certainly can be a threat to banks because, for example, we know that Walmart and Amazon now develop their own token, and the real issue is not the acquiring fee of Visa, but interbank fees. And by having their own token, it will actually help to eliminate that. So in a sense, blockchain technology and stablecoins is a disruptor that we needed, because it's no secret that financial system hasn't been really innovating as much and hasn't been so innovative in the long run. So this is something that is, it's something that was needed in the space, and it can surely take away some inefficiencies, whether it's remittance, whether it's so-called interbank fees, which are frankly caused by monopoly position by a lot of players.
James, you're getting very excited at the end.
Because I know you want a debate, and I think this is probably a debate topic. So, no, because I think the reality is people like to say that payment system isn't innovating. I think that's rubbish. I think the payment system is innovating incredibly fast all of the time. And whether that's the different banks and the applications that they're offering, whether it's the actual underlying payment systems. So we've got faster payments in the UK. We've got SEPA Instant here in Europe. You've got Rix Instant and Swish in the Nordics. You've got the Pay Now or Fed Now in the US. And all of these work incredibly well in a regional concept, right? So you can make relatively high value payments 24/7, 365 for nothing. Where they fall down is there's no worldwide settlement network that they can all connect into, and it's politicized. SEPA's going to go, we rule the world, you know.
Yeah.
FedNow is going to go, we rule the world, and everyone goes, no, you're not ruling the world. And so then they end up in this coordination problem.
So going from that, and I'm going to go back to Alex here. Speed of payments on traditional rails like the SEPA rail, things like that. Obviously, you have SEPA Instant and things like this, but you also have a cost implication with that. So how do you see then the stablecoin coming in and actually having the speed and the technology there to take over from these, and the cost side of it?
Yeah, so I would say that most of the volume of stablecoins comes from settlements between exchanges, hedge funds, proprietary trading firms, and so on. And it's certainly a good settlement tool. If we're talking about like retail segment, the biggest hurdle is so-called last mile. Is, for example, from remittance perspective, let's say that someone from US can send to their relative in Nigeria, let's say, some stable coins. The question is, how do you convert it into Naira, you know, and how do you actually spend it? There's been a few ecosystems, especially in LATAM, where you could actually spend some of the USDT and buy goods, like in various type of goods and services. But the real issue is, how do you actually convert it into fiat, you know, and this is something that has been a hurdle for adoption for quite some time. And building effective off-ramp tools, I believe, especially in the remittance space, is very important because, of course, even large trading firms and who trade, let's say, commodities now are settling in stablecoins. And of course, it expedites settlement a lot. But when we're talking about retail segment and remittances, the real issue is how do you actually off-ramp and how do you actually make it spendable, and therefore you boost adoption this way.
So realistically, at this very moment in time then, the banks need the stablecoin, but the stablecoins need the banks. And because they have to be able to off-ramp it.
Moreover, to James's and Alex's words, these days there are many locked liquidity pools in local currencies, whether SEPA, whether GBP in faster payments, or maybe some local African mobile payments thing. And stable coins actually help to bridge that. It's an amazing liquidity migration tool that will be increasing in usage by bigger players as well, not just retail. Banks, fintechs, let's see, maybe potentially central banks. The CBDC thing may still happen.
Don't say CBDCs. He starts shaking.
Course.
He starts shaking over in the corner there.
I mean, it already almost exists in basically governmental stablecoins is CBDC.
Absolutely.
Yeah, I would just like to add that you know, in many of the jurisdictions which are traditional remittance channels, there's an issue of local currencies being not as strong as US dollar, because US dollar being like a global reserve currency, the other currencies will always inflate more compared to US dollar, right? And of course, in LATAM, in Africa, in Asia, we see like local currencies being not as strong. So a lot of users actually prefer stable coins in USD because they see it as inflation hedge, you know, because while their currency loses value daily, especially in LATAM, they see that they can actually preserve and have this inflation hedge. So I think it's also important to recognize the significance of earned products, you know, because once you actually earn, you are more likely to be using, like, let's say, stable coins, not just as a remittance, let's say, or a payment tool, but also as your, let's say, personal treasury, you know, like your bank, and how you actually manage to grow your wealth this way.
Yeah, Jonathan, I see you're starting to twitch now as well. So
yeah, because I want to add on to what Alex and James said, because basically what James said is exactly what's the problem right now. Because all the banks and local aggregators all around the world, they have very, very strong rails on their own, but because banking worldwide is so fragmented, and for political reasons, right? They want to control the monopoly. SWIFT is very big in this part. SEPA is very big in that part. But there's no one entity that merges everything together. So what stablecoin is actually doing, it's not just disrupting, it's actually allowing companies like myself to merge these different payment rails together in one. And we use stablecoins to do the settlements within the different countries. So I believe now it's a race on who is able to take advantage of this big opportunity of integrating SEPA, SWIFT, stablecoins together in one ecosystem that allows global bankings from all over the world to be able to transact privately and seamlessly. It sounds impossible because your countries have created that fear in you that banking seamlessly is illegal, but it's not the case in a lot of countries.
I've just seen the clouds open above you and the lights start beaming down, and you're giving what the future needs to be.
Yeah,
sort
because
of
it's
thing.
true.
So,
like, for example, a lot of things that are very, very illegal in Europe, it is 100% legal in Asia.
yeah.
Likewise, like gambling is very illegal in Singapore, but it's promoted here.
Yeah.
So what I'm trying to say is open banking and this kind of settlements is actually going to be adopted in the very, very near future. We just have to open our eyes and see, because the media and a lot of regulators are trying to create a lot of fear to push their narratives for you to adopt their stablecoins.
It's the same. It's the same with when it was with fiat. Everybody's pushing their own agenda, and it's becoming the same when it's coming with the stable coins as well. And it's not going to change when it comes to the CBDCs. It just isn't. They're all going to be pushing their own agendas and things like that. And Trump will probably tariff everything anyway, so it makes no difference.
You mentioned a minute ago about that stablecoins need banks and banks need stablecoins. I think that's quite an interesting, I definitely agree with that. I mean, today, whether you're an EMI or a PSP that's dealing with stablecoins or a CASP or whatever you are, we all need banking partners. Because to what I was saying, the majority of the funds and the clients that you want to acquire, they're still in the fiat ecosystem. We're trying to bring that money into our ecosystem. And so it has been quite impediment to growth, right? But a couple of interesting things is that when we talk about SEPA and charges, the charges are not in actually the clearing network themselves,
no.
right? It's not there. It's the gatekeepers, it's the direct participants. Same with Visa, Master. Well, they charge a lot actually, but on the SEPA side, now EMIs like us, we can't directly participate in SEPA today. So we have to go through a gatekeeper as a bank, and they charge quite high fees, and we have to charge them onto our clients, and then the clients pay high fees, and nobody likes that, and they say SEPA sucks, it doesn't work. But in reality, it's just the gatekeeper. So EMIs are being allowed now to have direct participation in SEPA, which means that it's almost free in marginal cost of a SEPA transaction.
I've seen prices at 0.006 of a cent. With direct participation.
And then stablecoin issuers can rule the world and basically replace banks.
I think that's what this is all about. They should have just said, when are stablecoins going to rule the world? We have literally 2 minutes, guys. What are you going to like to see to happen when it comes to the stablecoins and the ecosystem around stablecoin and banking? And I'll give you a very quick sort of 25 seconds each, starting from Mark. What do you want to see coming in the future on it?
I want to see my grandmother doing transactions in stablecoin. That's the first thing.
And the greengrocer accepting it.
Of course, exactly. Regulatory clear understanding of what to do, both from regulator side and from the financial players, and of course thereafter the users. I think it should stabilize. I think everyone should figure out how to control it, how to regulate, the same as with the EMIs. 10 years ago, EMIs was pretty much Wild West. Now, it's a bit over-regulated, I think, but at least it's stabilized, it works. So I think the same will happen with stablecoin market. Regulation will become more clear, stable, and of course the fiat part of rails will be very powerful, and players won't be let's say, discriminated because of their crypto.
I'm going to quickly stop you. Alec, have a very quick discussion. Alec?
Yeah, so from my perspective, of course, the adoption will be a big part of it, but it is important to disrupt those areas which, where we need improvement. Like, for example, I know SEPA is great, alternative payment methods is great, but for example, in remittance, the fees of 4 to 6% are quite normal. And if, let's say, there's an immigrant family that is making that much and want to remit funds back home, and paying 6% on that is not really fair. So we want to see those issues eliminated, and of course, for adoption to drive, and also like for regulation, allow for institutional guys to participate and for it to be more holistic.
Thank you. Jonathan, very, very quickly.
For me personally, I think what I will envision the future to be, and I hope to be, is what I already mentioned.
Yep.
What we are creating is to push more of the narrative of allowing different banks from different parts of the world to work together with SWIFT, with SEPA, or they don't have to agree with each other, but there's an open banking or infrastructure that integrates everything together to allow people to transact seamlessly between banks, between countries, and then countries adopting this infrastructure instead of trying to push their own, because it's going to take a long time if every country fight to build the infrastructure to catch up with that. But yeah, so that's what I envision to see.
James?
5 seconds. I think we need better digital identities in order to support this whole ecosystem, because regulation is
one of my key things to design was a blockchain identity thing that you could have on your phone, so when your passport changes, wherever you are, whatever your KYC is, updates automatically.
Zero knowledge compliance.
Absolutely.
Hopefully it will happen. Hopefully.
Ladies and gentlemen, please put your hands together for a fantastic panel here. And thank you guys for being on it and giving over interviews. Thank you.